Because of big news this week, most important will be your daily chart. This is your strong trend line. After 3 retests on 4th attempt, it breakout. After breakout, price is sideways and price has tested this trend line after breakout. So technically all the steps of this trend line are complete except new lower low. And these two are your big support level. And these are static horizontal support level plus fib retracement top to bottom also at same place 50 and 61% retracement level. It goes up or down next month, it does not matter, but technical trader will buy on these fib retracement level because everyone who missed this entire bullish trend, this is their second chance and they have only two chances. So chart pattern in final stage and static support level, and price will stay about $2,000 depends on big news this week. Fed FOMC speech will decide where gold will go next this week. But biggest focus in FOMC speech will be Fed QT monetary policy. Their balance sheet size after decreasing stay there or they increase again. Until it does not increase, this is bearish for gold. And their balance sheet size is more important than rate cut or hike. If you see all the data which came after December FOMC meeting and before FOMC meeting this week, all of them say one thing: soft landing in USA. Your CPI is already up, PCE is sideways on quarterly and yearly basis. You have already seen strong retail sale, and last week you saw strong GDP number. While China economy is collapsing, US GDP was positive most of the time, and that is killing all the recession forecast. Since China's stock market is collapsing and this is biggest indicator of economic collapse, nobody talking about BRICS propaganda. It is 2024 and what happened to new member of BRICS? Since Chinese stocks are collapsing, hedge funds are collapsing, nobody is saying de-dollarization or gold flying to $10,000. All of those arguments are completely gone because China is collapsing. And you have Red Sea crisis. That crisis is going international, and if China economy break bottom, economic boom start because they are doing stimulus, plus your FCI at decades low, then that will be extremely bad news for Fed. Maybe these three reasons combined force Fed to do emergency rate hike last week. The QE which they did last year, that came again last year in November December month. They must have done rate hike in November, supposed to do rate hike in December FOMC meeting, but market collapsed before FOMC meeting and correct itself. And after that emergency rate hike, which you officially cannot say hike, gap between these two charts is gone, and because of that you can say monetary policy is tight again. And if they continue QT and give hawkish speech, then this is a bad thing for gold. That last week emergency rate hike was biggest reason for bearish gold, which everyone was missing. 2 months ago, gold was flying, it was going 5k, 3k, and being blind to that emergency rate hike, crowd bought gold 2 times at 2088. That emergency rate hike killed your triple top. And if Fed did same to same as expected, then you will have two candlestick closing below 2080 and you can call it quadruple top. And it has been 2 months. Now we are saying say goodbye to soft landing because now Goldman Bank is saying US economy on its way to soft landing. QE and soft landing end. But after soft landing, next is hard landing, price is 3k. But before hard landing, there will be earthquake, which will explain in detail after FOMC meeting. Thursday, January 30, you have jolts report. Most important news before FOMC meeting. PPI just few hours before FOMC, it changed their FOMC decision. So this news is same like that. After that, you have ADP, small news, and ECI. Again, important news for Fed FOMC meeting. Then biggest news of this week, FOMC meeting on first day of new month, 12:30. So again there is a possibility you saw one more candlestick closing below triple top. And same day you have ISM manufacturing PMI number. As long as Elon Musk, Robert are folding t-shirt, do not worry about manufacturing number if you see zero first time in history. Then again most important news plus Friday. So very dangerous thing. Ignore number, focus on UR rate. As long as it is below 4%, it is varies for gold. Same which I said last month. If it comes 4% or higher, then bullish for gold, otherwise bearish. Again on Friday, you have more important news. Inflation expectation. Last time they came down. But war is increasing and British tanker is right now warning. So war will not stop until inflation expectation jumps in big way. And consumer sentiment, last time 78, very high. All of this data together, war, China and consumer sentiment will force hawkish Fed. So be careful on Friday, especially after your FOMC meeting. And after FOMC meeting, we will decide next month candlestick will close below quadruple top or it will break out. For more detail about FOMC meeting, you can watch this video. An FOMC member like Bullard, they can say 7% Fed rate in November 2022 and now they can say rate cut in March. Who knows, FOMC member say something this year then leave FOMC meeting next year and say opposite thing like Bullard. This week monthly and daily chart are most important. Nobody care what is happening on 5 minutes. So sad for scalper. But H4 chart, you can see 2 month and 2 time buying at 2088. And from this level, you have clear downtrend on H4 time frame. You have a trend line, your dynamic resistance, you have static resistance 2040 and last resistance 2060. For gold to go $3,000, first you need breakout of this trend line and static resistance, both at the same time. After breakout on retest, you can start buying, but below these two levels, technically gold bearish. It has been 2 months. Now I say last time, Fed will not cut in this FOMC meeting. And how low price go below this trend line? or this trend line breakout depends on Fed FOMC meeting. So buyer, you will not buy until 2040 level breakout, and seller can sell based on 2040 resistance level. For intraday, if 2000 level breakout on retest, you can sell again, but bearish below 2040 level.